Welcome to this week's edition of the Construction CPA's Coffee Cafe. I am the Construction CPA, Lisa Raish. We are dropping the hammer on cash flow problems so you can build things that matter. So this week's topic is going to be record keeping essentials for your tax season. All right. So, keeping your records is just as important as making sure you get all the deductions that it is that you may potentially be eligible for. So, you know, we see it a lot, but when tax season comes around, are you scrambling to look for receipts? Are you, in a rush to find missing documents? You know, record keeping really can ultimately save you time and money and stress. And again, managing that record keeping throughout the year instead of scrambling all around at year end to get it done is a lot easier to do. So we're going to talk about why it matters. We're going to show you some simple steps to actually keep your records. And you always want to be kind of at a moment's notice, like audit ready, should you ever get chosen. You want to be able to provide the documents that you need. So we don't want to see you scrambling to look for them at that time also. So let's talk about some different ways that we can help you to keep track of your records in an orderly fashion, and in a way that works for you. All right. So why does this matter? Why does keeping good records, good financial records matter? So you need proper record keeping because it is going to be less stress at tax time for you. And in most cases is going to give you more accurate filings. So you've kept track of the information, you've accounted for all of it, right? It's a lot easier to do it throughout the year instead of scrambling at year end to try and find all the things. Unfortunately, we all do it. We lose things throughout the year. So we want to show you different ways to do it throughout the year instead of just scrambling to do it all at the beginning of tax season in that January, February timeframe. It also reduces the risk of audits and penalties. I've been through audits where taxpayers have not been able to provide all the documents, and therefore certain deductions were actually disallowed. And so now they've got a much larger tax bill because they can't prove all of their receipts. So again, it's super important to keep that information. It's going to help you during audit time, and it just reduces the risks of penalties and interest in these audits. You want to make sure you maximize your deductions, right? You need to, if you can't prove the deduction, you can't take the deduction, right? So it goes right back to that audit stuff. Again, if you can't prove it, they won't let you keep it on your return, and then they make an adjustment with an additional tax liability. And it also gives you better visibility into your cash flow throughout the year, and then just your overall general business health throughout the year. Again, you're not scrambling in January and February looking for this information. You've had it throughout the year. You've been managing it. You've been managing your financials. You've been taking your deductions throughout the year. It's a lot easier to keep track of and manage the health of your business if you're doing it throughout the year instead of, again, the big scramble for a couple of weekends in February in order to get you ready for tax season. So let's talk a little bit about some of the essentials for record keeping. So what records do you need? You're going to need records of your income, right? The revenues that you've earned, the invoices that you've sent out to clients, your expenses, what you've paid, the ordinary and necessary business expenses. You're going to need to keep your payroll records. You'll need to keep the receipts for anything you've kind of one-off purchases you've made. A lot of us have auto charges to our cards on a monthly basis for various charges. You want to keep either the invoice, the email, something as record proof of those expenses. You want to keep your bank statements, your credit card statements. If you have loans, you want to keep your loan statements that keep track of the interest and principal assigned to your loan throughout the year. Again, you've got record of that. And then the last thing is if you are in fact tracking mileage, you want to keep a mileage log. Sadly, I've seen in an audit situation when a taxpayer could not actually present the entire log, part of the mileage that the client had originally taken on the return was actually disallowed because they couldn't prove all of the miles. So if you are taking mileage, you want to make sure you are maintaining a mileage log. It's a really easy one for them to take in an audit and disallow if you cannot prove. Digital versus paper. We are pretty much digital, entirely digital here. We have very, very little paper. We still have clients, some of them still have paper systems. What I will say is you need to do what works for you. We typically do digital, so apps, most of the apps are in the cloud. It tends to be safer and more efficient. Again, you want to make sure you have your things protected from that perspective. If you are going to do paper, you just want to make sure that one of the big things that we see with paper is over time the paper disintegrates, or you lose the ink on the paper that prove, like for example, for an expense that proves a receipt. So you want to make sure that if you are in fact maintaining paper receipts, that you do that in a way that they don't degrade over time. You keep them in a safe place. So unfortunately, sadly, paper can be destroyed by water or fire, or just general age. I'm not saying you can't do it, just be mindful of how you do it, because those paper documents may over time disintegrate. So if you want to keep a paper system, my recommendation would be to at least take, grab like PDFs, pics, something of those so that you have both the paper as well as the digital in play. The other thing is if you were to get asked for any of that information, it's typically a little bit easier to find the digital information in a quicker fashion than it is to go through paper files. So something to think about. Neither one, no is better than the other. There are inherent dangers with both. You just want to be mindful of what the dangers are and try to kind of hedge that risk so that you don't in fact lose those receipts. The IRS has general record keeping requirements. They say at least 3 years. Some types of records actually need to be kept longer. So you want to make sure, especially something I believe tax returns you are required to keep into perpetuity. So you want to make sure you're just mindful of what the rules are on what certain things are. So again, it's a lot easier. It's less space to keep years and years and years worth of digital documents versus, again, if you've got years and years and years of paper, you have to find a place to store it. So again, something to think about, but be mindful. In most cases, it's at least 3 years, sometimes longer. So you want to make sure you understand what the rules are for what it is that you are in fact keeping, because it might vary. All right. So what are some things that you can do? Some tips you can do right now, takeaways from this, like what could you do right now to help you with your overall record keeping? All right. So first and foremost, we talk about this on here all the time. You need to separate your business from your personal finances. They should not be commingled. You want to keep them separate. Again, commingling them, for example, in an audit, now you need to figure out which one of these are actually truly business expenses and what's personal expenses. Gets complicated, creates a lot of issues. So again, business, personal, separate, bank accounts for the business, credit cards if you're using them, right? Everything is separate. And for the owners, again, you're paying yourself. And when you pay yourself, you pay into your personal account and then you pay your personal bills out of there. Your home's mortgage, your rent, your utilities for the home, your groceries for the home, right? It's all separate. You do not want them commingled. I recommend that you do go digital. That is a personal preference. Some people aren't entirely on board with that. Again, it's a lot easier to scan or snap a pic of a receipt. There are tons of apps that do it. We use a product internally. We are now using something that's baked internally inside of one of the other month-end tools that we use. So we have the ability to keep track of those receipts, and then those receipts come in through there and then they attach to the client's financial statements so that when you actually click into the client's financials, you can see a copy of the bill. You can look at it right there on the screen. Again, I prefer digital. I find that it's again lot less. I don't have I don't have file cabinet after file cabinet. I have to figure out where to store all of last year's information. We keep it broken out by the year. We keep everything digitally. So again, there are tons of tools to keep track of them. Most of them are secure. They have relatively easy access to for you to get at them. So it's something to really think about. If you are maintaining paper, I do recommend that you have a combination of paper and digital just to keep yourself protected should anything happen to that actual paper. Third, make sure you schedule monthly check-ins to reconcile your accounts, your credit cards, your bank statements, your loan accounts. File your receipts in whatever fashion you have them. Again, I know for us, when we're doing our own internal stuff, we're making sure that we have all of our receipts that support all of the expenses inside of our own personal QuickBooks files. And so we're doing that with clients as well, right? So we're making sure, hey, this expense doesn't have a receipt. Can you bring it, can you send it on over? So again, we're keeping everything. And so we're doing that on a monthly basis. We're not necessarily scrambling to grab all of that information at year end, which can be part of the problem, right? That year end scramble is really quite painful. And then again, don't wait to do it all at year end. It's a lot easier to look back through your files for the last 30 days when you're reconciling the prior month than to look for a receipt for January of a particular tax year, and now you're in February of the next tax year, right? You might not actually be able to find that receipt. So again, schedule yourself some monthly check-ins so that you can make sure that you've aggregated all that information in a way that you can in fact find it. And the last thing is you want to keep backup records. Cloud storage is great. It does, ensure that you won't lose key documents, but make sure you have, different backups of that to make sure that if anything were lost in one place, like you could retrieve it in another. So again, something to think about, making sure when you are actually looking for the online apps, the cloud apps, what are their own, redundancy procedures and so on and so forth to make sure that you're keeping accurate track of your information and you can get at it when you need. All right. So make sure, just to recap, you want to keep organized records. It's going to be less stress for you in the end. You will, in most cases, be able to get all the deductions that you should, right? Because now you haven't forgotten about a receipt. You have all of them. So now you've accounted for all of your deductions. And at the end of the day, it really does mean that you have a stronger compliance, for yourself and your business. You are legally required to maintain that information, right? So you want to make sure that you have it. It's a lot easier to do it that way. So make sure, honestly, start today. If you haven't done the whole year at this point, okay, fine, but start with today, start with the last month. It's so much easier to take it, in small, even, bites instead of I need to do an entire 12 months. No, let me just start with the last 30 days, start, pulling all that together. It's like any other habit. You want to build that up over a time. And again, it'll save you big during tax season. It's less and less of a lift for you at tax time. All right. Well, I look forward to seeing you here every week. Follow us on our social channels. We can be found on YouTube, Facebook, Instagram, and LinkedIn, and we are at the Construction CPA et al. I look forward to seeing you here every week, and I'll see you next week.